Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. Now, as always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard with some tools in our web trader that make the risk management side of things quite a bit simpler. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the web trader platform, which allows you to trade on MT4 and MT5 accounts from the same location. Our app also allows that, which you can find in the major app stores. You can trade on both MT4 and MT5 accounts from the AvaTrade app. Now, to log into the web trader, in the upper right corner, you just click on login and enter your details. Now, technical analysis is the focus of this webinar, but we should talk a little bit about the fundamentals before we get into picking and choosing potential moves on the charts. Now, from a fundamental perspective, there's a lot of focus globally on when is inflation maybe going to come down enough in the major economies, including the US economy, the Eurozone, UK, etc., enough that monetary policy could maybe swing back to being a little more loose, maybe lowering interest rates back down after all the rate hikes, especially in the US. The rates were increased again and again and again in countries like the US to try and slow things down because prices had gotten so high from the high demand and the easy money. And so the higher interest rates were meant to make things a bit tougher so that inflation would come down from a decrease in demand. And it has worked somewhat. Some would say quite a bit, but not to the point that central banks necessarily see the inflation numbers at the target of what they're shooting for. And so an example is out of the UK, the Eurozone, the US today. We saw, again, numbers come in a bit lower than expected on PPI data, CPI data. These are inflationary numbers that come out that give perspective on prices for both producers and consumers at the retail level, and it shows prices, and the inflationary numbers in general are starting to come down even more than expected, but at the same time are not coming down so rapidly that there's certainty on being able to maybe start to lower interest rates back down and ease monetary policy. And so there's kind of a limbo here where out of the US, for example, jobs numbers have really started to look bad, coming in worse than expected with a number of recent announcements, and wage numbers as well, sparking fears of recession, while at the same time, inflation still isn't down low enough to be 100% comfortable with rate decreases. And so there are fears that this soft landing, so to speak, that many were hoping for economies around the world to be able to, start to ease out of the high interest rates without crashing the economies and have inflation come down to the target levels. At the same time, there's fear that might not be occurring, that maybe we're going to run into a recession before we can get inflation all the way down to the target levels. And so with that fear, comes volatility on the charts. And we've seen that over the past week or two with the markets rushing up and then falling down for a couple days. I saw the Dow Jones drop 1,000 points in one day, come back up 500 points the next day, etc. And so there's a lot of that volatility out there. Today, there's a bit of optimism on the market because the numbers showed inflationary data dropping as expected or even slightly more than expected. But again, if that happens too strongly, the cheering turns into recession fears. So while while the markets cheer the drop in inflationary data, the fear is still there that if it drops too fast, then maybe that's a sign of a recession. And so it's like, a person walking a tightrope. If you don't want to fall off either side, you want to be balanced with inflation coming down, but the economy not crashing along with it. Okay, so with that in mind, then we take a look maybe at some technical signals and see what's happening with movements on different instruments, and understand that there is a balancing act going on right now with trying to bring down inflation, but fears of recession at the same time. So if we look at something like gold, which is a typical safe haven currency, we can take a look at the movements of gold and understand that if gold's moving for a long distance in one direction, since there's such a balancing act going on between fears of inflation and fears of recession, that perhaps there could be a swing back the other direction with too much movement. So what we see is there was a signal today to sell on gold. It looks like it's almost reached the take profit zone. The take profit zone being these two red lines here, which are lines of support from the past. And so if we bring this up on the chart, okay, we see the one-day candles here. And on the one-day candles, we see there's resistance up here near the all-time highs. Okay, once testing around 2480 and change, 2483. Second time tested near 2483. And then a week later, a couple weeks later, which was just a couple days back, getting up in this zone again, and today really testing that all-time high again around 2480, 2483 before pushing back down. Okay, so on the one-day candles, there seems to be an established strong resistance level up near 2483 that's been tested once and failed, twice and failed, and a third time and failed. Okay, and if we start to look then, where's the support level? On the one-day candles, we're looking down about here. Okay, resistance, support, where it hits and bounces back up. Resistance, back down, support, back up to the resistance, and if it's going to stay true to form, back down to the support level. Okay, and so the fact that gold is reaching the highs when there's recession fears, it's pulling back down with, reaching the high with inflation fears, pulling back down with recession fears, back up with inflation fears, back down with recession fears, back up with inflation fears, and now the numbers came in lower than expected on the inflationary data, so back down maybe with recession fears. Okay, a lot of times gold is an inflationary safe haven. People rush to gold when they think currencies are weakening. If it's the opposite, not inflationary fears, but recession fears, then perhaps gold retreats the other direction as maybe other safe havens become more attractive. So whatever the case may be, the reasoning behind it fundamentally, we do see the pattern. And it's very clear to see this pattern with support at this level, resistance at this level, support, resistance, and resistance. And today's signal was right on top of that. Okay, sometimes you don't understand if you don't look at the bigger picture. And these are one-day candles. Why was the signal to sell from this level up here? And you can see clearly why from a technical perspective what's happening with this pattern. So if you sell on gold with this signal, it's almost to the take profit zone and these signals are more short term. So it's almost to the take profit, which would be somewhere right around here. Okay, but in the bigger picture, if you want to be more patient with a sell move, it looks like it wouldn't have to break the support level on the one-day candles until dropping below 2400 and really pushing towards 2354, 2355 down here. Okay, so if you think there could be a move down, a strengthening of the US dollar perhaps against gold, then this could be a move that might make sense for you. All right, now we can set this up in a risk managed way. Let's say that you wanted to do that, and I'm not here to say that that's the trade you should make. But let's assume you were, based on the technical setup and this resistance level looking like it established a pattern here with this support level down here, kind of ranging between these two levels. Okay, so if you were going to take a shot here, you could do AvaProtect and protect it by the hour up to a couple days, or we could stick with a stop loss. In this case, we'll do a stop loss to simulate. And as long as it doesn't break the all-time high, you could stay with this move. So 24.89 would be an all-time high. So if I put my stop loss up there, if there's still indecision in the market, maybe it doesn't break the all-time high. Since we've got this balancing act between fears of inflation, fears of recession. Okay, so we're taking a look then at 24.89 to the stop loss. Take profit then down around 23.55 or so if you're looking at that support level down there. 23.55. Okay, so I'm looking then with stop loss up here and take profit just before the support level down here, 23.55. What I'm looking at then is about a 2-to-1 ratio, potential profit to possible loss. But I don't necessarily want to risk over $17,000 on a balance of $64,000. It's a huge percentage from my perspective. So now that I've got the technical analysis set up, stop loss above the resistance, the all-time high, take profit before the support level down here. Now I just need to adjust my trade size to be the level of risk that I'm comfortable with. So one lot, I'm risking 4,400. Okay, 0.25. I'm risking 1,100. 0.12. Risking 53 or 530. So now I'm getting close to maybe 1% risk on my balance, something like that. 1% would be about 647. So as an example, I've just risk managed the trade size with this technical setup for about a 1%, a little less than a 1% risk on my balance. Okay, it tells me exactly how much I'm risking to that stop loss price. Okay, so if I had 10,000 in my account, 100 would be a 1% risk. Okay, 1,000. $10 would be a 1% risk. Okay, so you can have that number in mind. And I use 1% as an example. You can risk the amount that makes sense for you. You can risk less than that, more than that per trade. You can vary it per trade, but at least use these tools so that you know what you're risking before you place the trade, and you know what your potential profit might be. I'm looking for near 2% profit, risking about 1% or less than 1%. Okay, with this setup. So I've got a trade on the larger candles then with an established resistance level and a support level that's opportunistic, meaning the support level's further away and the resistance level is closer. So I can get my stop loss beyond the resistance, in this case, the all-time high on gold. And as long as it doesn't reach a new all-time high, then I win this trade. Okay. And if it hits a new all-time high and I get out, it's okay. It's a very small risk on my balance. And from a fundamental perspective, it's at least neutral, this move. I don't know that the fundamentals say gold should go up or down. It's kind of neutral right now, kind of a balancing act going on between happiness about inflation coming down, but fears of recession. So, and you can see that balancing act, like I pointed out, as this goes from one support to a resistance, support, resistance, support, resistance, and maybe the pattern continues here. Okay. Now, we can take a look at some different classes of instruments. Maybe we look at a major index. Could look at the UK 100, the US 100. They're trending very similar, by the way. it really is a global economy when you think about it. When the markets were selling and crashing, last week, wasn't just the US market or just the UK market or just the European market, the Asian market, they all were falling with global fears of recession. The bounce back in the past few days has been a global bounce back. Okay, so it's not always that way. There are times where there are regional fears or regional optimism that doesn't spread globally. But many times you do see this global reaction that we're seeing these past weeks. Let me just get rid of some of these old lines that I drew. Okay, so on the one-day candles, we see the US Tech 100 climbing. Let's actually take a look at the signal if there is one. There is. Okay, it's a buy signal. Makes sense to me that there's a buy signal from a fundamental perspective. Like I said, there's a balancing act going on. Right now, the inflationary data came in lower than expected out of Europe, out of the UK, and out of the US. So there's a bit of optimism that, hey, inflation's getting more and more under control, and maybe interest rates can come back down. So that tends to make the stock market bullish, at least for a short period of time, until the next data comes out, like tomorrow. But right now, it looks like this is on the direction of the signal. Again, these signals aren't always correct. The fundamental news needs to help support it. So as new data comes out, if it's in the direction that the signal was already in, or if the signal was based after the data came out, then many times you see maybe better success from the signals. In this case, the signal's moving in the direction we would expect the stocks to go with the lower than expected inflationary data today. And perhaps the signal came out before that data. I think some of it had already come out in the morning, and maybe the US data had not yet come out when this signal was released. And it just happened that data helped support the optimism as well. So it looks like this is pushing towards the take profit zone up here on the buy signal on the US 500. Will it reach? Maybe. If nothing comes out in the meantime to create fear, to change the momentum. Now we all probably are aware, there's tensions in the Middle East. There's the prospect of a regional war. If anything breaks out with headlines that something's imminent with that, in the coming hours, this whole movement up and this optimism could completely flip. Could see a sell-off of the equities. So if you're buying with this signal and the optimism that's there from the lower than expected inflationary data, understand that you still want to risk manage no matter how confident you are in that move. You want to risk manage things in case the next headline works against you. Okay? So with that in mind, we can take a look. We see the one-day candles have reached a resistance. Okay, I can see that right here. Let me get rid of this vertical line. So here's resistance on the one-day candles on the US Tech 100 from the past. Okay, this is back in June. So resistance, resistance, resistance. Once it went above, it never looked back until here, where it crisscrossed that price. And now we find ourselves just below that price. And you see the wick at the top of today's candle hesitating at that price. It's not a coincidence that this rose up so quickly yesterday and today, and then paused right here. We see the pause in this one-day candle. Why? This is a resistance level from the past. Okay? If it breaks this resistance, we could see a surge up towards the next resistance level up here. Okay, right now it's testing, and it has not broken this resistance yet. To hit this take profit zone, it looks like it needs to break at least towards or through this resistance level on the one-day candles. Okay, so now let's go to the smaller candles and analyze. Do we like the entry point to buy on this signal? Okay, it looks like it broke through the resistance. You see, here's the resistance on the one-day candle that we just drew. It broke through and immediately reversed. It's an immediate reversal we see. Breaks through, and on the next 30-minute candle, down it goes. That's a sign that there are a lot of sellers at that price. And it fits the idea that the market is ranging up and back down, like we saw with gold. That type of pattern where you see up and back down between two price points, like gold was doing with the upper all-time high and then back down to the support level on the one-day candles. That's what we call a ranging pattern. And perhaps the rest of the market is going to follow suit. So while this looked like a solid signal, perhaps it ran out of steam before actually reaching the take profit zone. Okay, that's the way I'm seeing this. You could see it differently and see this pullback as an opportunistic spot to buy because it has not yet reached the take profit zone. In the short term, that makes sense. It could push up to these levels in the next couple hours. I have no doubt that that could happen. The bigger picture I'm looking at is there are fears of a regional war in the Middle East. There are fears of recession. And we've been bouncing between optimism of inflation coming down, which is what already occurred today, and fears of recession and fears of war. Okay? We've reached a major resistance level on the one-day candles. We just saw that. One-day candles. This line I drew is resistance here from the past. It tested and just fell back below it. Okay, so from a technical perspective, this looks like a reversal of an uptrend and a signal that maybe died just before hitting the take profit zone. All right, so I'm going to take that perspective and say, okay, I understand why the buy signal was there. The fundamentals were there with it today. It almost reached the take profit zone. But now maybe moving forward, other momentums could take over because we've seen this seesaw battle up and down with the commodities and also with the equities. Okay, so if I then look at this one-day candle setup and I say, let me see if I can trust this resistance. And if I'm going to put my stop loss just above the resistance, which is here, okay, above today's high and above this resistance level from the past. If it breaks that, then it could be up and running to the next resistance level up here. So a short stop doesn't risk much. Stop loss 19,250 could make sense. If you want to be more patient, you could go a bit higher. This is more of a scalp type move, short-term type move. And so then take profit. If it is going to turn into a downtrend, perhaps it goes down and tests the first support level down. Okay, and that would be down in this area. It was below this level. If we just go back to yesterday, it was down here yesterday. So it doesn't even have to get to yesterday's low, just this little support/resistance level from this wick here, 18,783, let's say, without having to break any support levels, 18,783. We put ourselves in a situation where the potential profit is near 3 times, over 2.5 times the risk. Okay, now we just adjust the trade size to be an amount of risk that's acceptable. So risking 1,400. If my goal is around 600 for the balance that I have, then I need to go smaller, 0.05, just over 700. This should be the sweet spot here, 0.04, just under 600 risk to try and make over 1,300. Okay, so again, going after 2%, greater than a 2% profit on my balance, somewhere around 2%, risking 1% or less. That's an opportunistic entry point if indeed the market pushes back down now. Okay, so we're using a couple different things in this method. One is trying to get a gauge of what's the fundamental news situation, and at least trying to make sure any trades you make, you don't have the fundamental news working strongly against you. The aim I have with my technical trades are check the fundamentals, and if I believe the fundamentals are at worst neutral on the trade, then okay, I can make the trade based on the technical setup. If the fundamentals I feel are working more against me than with me, then I tend to steer clear of those technical trades. And so by technical trade, I mean, look at this nice resistance level. We're just underneath it. It tested it and failed. It's starting to downtrend. From a technical perspective, this is a great sell. I can risk less to get above the resistance and have a larger potential profit without having to break support. This is a great technical trade to sell. And then from the fundamental perspective, I want that to be no worse than neutral. I don't want the fundamentals working against my trade here. And I feel like the fundamentals might be working with my trade a bit, but at worst neutral. Okay, with this balancing act that's happening between optimism about recession coming down, or I'm sorry, about inflation coming down, but fears about recession and fears about war. With this balancing act, there haven't been too many runs in one direction for too long without pullbacks. And so after this big drop and this big pullback up, perhaps it's time to move back down some. Okay, and we can see it's starting to gain some momentum on the way down on the 5-minute candles. We see this move down in the last 5-10 minutes. And when you're scalping, that's all you need to take profits. I mean, we could close with a couple hundred profit already if you're scalping. And many times that's what it takes, is just to find the resistance levels, to make sure that the fundamentals aren't against you at least, and to make the move and try and catch that reversal. I'm going to be more patient. I'd like to see these go a bit further with that 1% or so, 1 to 2% potential profit that maybe we're going after on those trades. Something like crude oil, it's interesting in a time like this. Why? Because there are fears of recession, which tends to bring crude oil down. We see inflationary data lower than expected. That means less demand. If there's slowing economies, less demand for energy, maybe there's reasons for crude oil to drop. Then there's one big wild card: fears of war in the Middle East, which is a huge reason for crude oil prices to potentially climb. Okay, so there's also a seesaw battle going on here, pushing crude oil up, back down, or down, back up. Okay, so let's analyze the charts on crude oil. Maybe we'll go bigger first, 4-hour candles, and we see a couple resistance levels up here. One we were at today and yesterday, a little higher before that. Okay, why was crude oil rushing up here? Fears of Middle East, worsening of the Middle East war situation. Why is crude oil pushing back down? Possible negotiations on ceasefire. Also, inflationary data coming in lower than expected, and boom, we see crude oil accelerate down. The price drops. Okay, you could start to pick a spot where you see support down low that you feel, because there's still uncertainty out there about the war situation, perhaps crude oil won't break a certain support level down. Okay, I see a support level here, which was resistance, breaks above and becomes support and back up. So here we are rushing down. Will it break this support level here? It tested once today, bounced back up. Here it comes again, looking like it wants to drop, just like gold was pushing down. It looks like crude oil wants to come down and test this support level. If we go to a larger chart, 1-day candles, we see it wasn't that long ago that crude oil was actually, let's draw another line, on a support level down here. Okay, 72 and change, below 72 and a half. If this breaks this support level here, you could see crude oil try and challenge 72 and a half down here. Okay, it was just last week that we were down here testing, and then bounce. Okay. Again, fears of war, up goes crude oil. Fears of recession, down goes crude oil. Okay. Today's numbers showing inflation coming down more than expected in the Eurozone, in Great Britain, in the US. Very predictable. Down comes crude oil. When will the fear of war take back over? There are negotiations in Qatar tomorrow, and I think carrying on to Friday. So the hope that some resolution could be made to avert a larger regional war in the Middle East, that positive thought and also the lower than expected inflationary data could work to break this support level and bring crude oil down this way over the next day or two, assuming no data comes out to conflict with that. Of course, there are more announcements tomorrow. There are more announcements the next day, okay? But in the short term, between now and tomorrow's announcements, perhaps crude oil can break the support level and push down towards 76 or lower, maybe not reaching all the way down to this support level, but the momentum feels like it's down right now with those lower than expected inflationary numbers that came out today across multiple regions. Okay, so again, it's a balancing act. Fear of war could kick up at any time, so you want to risk manage this trade. But right now, the economic data makes sense why crude oil is dropping. Okay, and looks like it wants to continue to drop. If we look at the signal that came out on crude oil, it was to sell. Okay, and it's not quite there yet. So the short-term signal is sell. It fits what we were thinking anyways, so it might make sense to make this move, okay, in a short-term perspective, because who knows what other fears could kick up by tomorrow's announcements, okay? So we take a look then, recommendation here is between 76.65 and 75.85 as the sweet spot to take profit on the short-term signal. Okay, so if we then go with that, we can expand the chart and start to look at support levels. Okay, if we look in the past, this was an area where it hit and went back up, hit and went back up until breaking below, and it became resistance here. So this price level seems important from the past. Also finding support here, here, here. Okay, so there are multiple spots in this area. So this is right in the zone where the signal is saying to take profit. So around 76 and change makes sense on this chart that you might look in a short-term move to take profit. Okay, so if we're doing a more of a scalp type move on this to go with the current downward momentum, so we look at take profit, maybe 76.25. Stop loss, I need to go to smaller candles. So I can see if this turns into an uptrend, what price would it need to break for me to give up on my sell? And I think this support level here, support, tested it and held, and then broke below. Here's the momentum of the drop. So if this goes back above here, I think it establishes a technical uptrend on the short-term candles. So stop loss, if it goes above 78.15, I feel like it's an uptrend again. Okay, so let's say 78.20 for a stop loss. So potential profit over 7,100, possible loss less than 5,000. Okay, still not a 2-to-1 ratio, but still to me an acceptable potential profit to risk ratio. And so then now I just adjust my trade size to risk the amount that I'm comfortable with. So if I go 0.7, let's see what's my risk. 518, 0.75. Risking less than 600 still, 0.8. Okay, just under 600, so less than 1% of my balance to try and make near 1,000. Okay, So if you feel like that entry point is good for you, you do a market move. If you think this might bounce back up some, but not break above this resistance, then maybe you're patient and you wait for a bounce before you enter. And that's, personal preference of trading. How patient are you? Do you want to try and wait for a better entry point? It does look like this in the short term anyways, might be trying to bounce a little. And perhaps you start to look at closer resistance levels to say, if this comes near this price, then I'll sell. If I can grab a better entry price. But if you're looking at the bigger trend and you're less concerned about the exact entry point and you think this will continue down, then you don't have to be so patient to get that exact price that you would prefer. And that's individual preferences with traders, okay? But in this case, I'll simulate that we do the move and feel that this downtrend might continue towards this support level that we identified down here, okay? More of a short-term move with the understanding that a headline at any point about escalations in the Middle East could completely make this trade go the wrong way. So it's a very low risk trade with a close stop loss, hoping to catch the current momentum before something disrupts it. And so we simulated 3 moves. The crude oil we just opened, and the other 2 are trying to move a little further into profit. We'll see how those end up in the coming hours, maybe by tomorrow. Those will come to fruition, hopefully to the take profits and not the stop losses. Okay, I don't see any questions popping up. Thank you for joining. I hope it's been helpful going through some of these ideas with the technical analysis. Kind of one of the main points I'm trying to stress is keep it in mind the fundamental news situation and try to do trades that the fundamental news is not working against your technical move. All right, everybody, thank you for joining. Good luck with your trading. Bye for now.